Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into the financial filing of Yuenglings Ice Cream Corporation, and no, this isn't about that Yuengling. This story is a bit like finding out your favorite ice cream shop is secretly running a tech startup. Buckle up, because this gets interesting. Yuenglings Ice Cream Corporation, yes, the name is quite deceiving, is actually transitioning into a tech holding company. The aim is to be like a mini Berkshire Hathaway or Alphabet, but for technology. They are moving away from ice cream and into cybersecurity and blockchain. Their flagship company is Reach Out, a cybersecurity firm focused on small businesses. They're also launching Trustless, a blockchain identity management platform. As a smaller, non-accelerated company, they get away with less disclosure. The cybersecurity market for small businesses is fragmented with many small players, and Reach Out is hoping to create a national brand to fill the gap by offering cybersecurity solutions tailored for small to medium-sized businesses. They claim most IT providers have slow response times and lack serious cybersecurity expertise. Reach Out aims to be different with fast response using AI and strategic planning. The plan is to use a holding company structure to grow through cybersecurity, AI, and blockchain, launching disruptive platforms like Trustless and aiming for a NASDAQ listing. Now let's get into the numbers. Starting with market value, it is only at about $646,000 and 427 common stock outstanding. These are really micro numbers. The stock price ranges are really low, with highs in the cents of dollars and lows that are fractions of a cent. In 2024, the high was only at $0.0067 at March, and the low dipped to a very worrying $67 at March at December. They issued a number of convertible notes that may convert to common shares at 50% of the lowest price during the 30 days prior to conversion. This means the company could be issuing more and more shares to pay off debt, diluting existing shareholders. For the year, the company's revenue was about $4.8 million, an increase from $3.7 million the previous year. The increase in revenue is due to the acquisition of Red Gear and Singer Networks. Think of it like adding new flavors to your ice cream shop to attract more customers. It is great that cost of goods decreased from about 2006 to becoming more efficient, using more software-based solutions and spending less on physical products. However, at the same time, it appears that their intangible assets are losing value, with impairments in the millions, but improving at threefold compared to $4.1 million in the previous year. The company had a total other expense of about $10 million, which includes interest and losses from derivatives, compared to other expenses of $15 million the year before. This is down in part because they were able to gain on debt extinguishment. The good news, they reported a net profit of about $4.4 million, compared to a net loss of $22.9 million the year before. The net profit was primarily due to large fair market value change and gain on debt extinguishment of their value change and gain on debt extinguishment. What does this mean? This is just a change in paper or accounting. You do not deposit debt extinguishment to a bank. However, cash used in operating activities is still almost $1 million. The auditors, Frushi & Associates TFTF LLC, determined that there were no critical audit matters. The company has processes to manage cybersecurity risks, oversight by the board of directors, and no cybersecurity incidents have been experienced to date. And hopefully they are as secure as they say. The company is in litigation with some companies it acquired, which has led to a reduction in customers and revenue. Basic earnings per share was 0.0010 and diluted. Earnings per share was $0.01. They are turning a profit. The report is saying that the company has sustained operating losses and has incurred negative cash flows from operations in the past. The financial statements do not include any adjustments that might result from the outcome of this uncertainty. Assets have dropped significantly from around $5.2 million to just over $500,000. They've reduced liabilities greatly, but have also diminished their assets. The total liabilities dropped sharply too, from around $27 million. The stockholder deficit also improved and was almost halved, but still a big number, going down from 22 million to around 15 million. Net cash flows from operations also aren't that impressive at close to $1 million used. Often so, what does all of this mean? It seems like Yuenglings Ice Cream Corporation is in a tough spot. They are trying to change their business model into tech, and their debt structure is unstable. Their plan involves high risk for uncertain returns, however, their debt extinguishment is promising. Their past is marred with uncertainty about operations, and this report does nothing to change that thing far. Thanks. Thanks for time to change that king. Thanks for watching. If you enjoyed, please subscribe, like, and comment.